What's up, everyone? I'm back. It's been a while since I made a video, but the key thing is I'm back. That's what it's all about. Can you create? Can you come back online? I want to share today's video about doing a form of inter-market analysis, more so when you're trading an instrument, focusing on the broader index before you make the trade. This has taken me a really long time to actually understand. It's super simple. I'll tell you why it's taken me a long time, but I think you're going to find it quite helpful. So you'll notice here I have an individual stock on the right, but then I have a large ETF representing an index. Sorry, stock on the left. This is a stock on the left, and an ETF representing an index on the right. So QQQ, the NASDAQ 100 large tech companies, and then this is bandwidth. It's an individual stock. Now, before I dive into what I'm doing here, let me also just remind you, what my channel's about, because you may find it. I've been working in the fintech space for well over a decade now. I've helped grow, build, and just sort of develop some of the largest platforms on earth today for individual research and around investing and trading. And I started my channel to give back to everyone for free. I think after you spend a lot of time doing something, you should go give it back to the world. Maybe I can teach some people something. So the point of this video is following that exact process. So let me just go to one chart here. I'm using TradingView, by the way. Absolutely incredible platform. I've worked for them before. Wonderful. You got to use this if you're not, if you need a charting and research platform. But I've been following this company Bandwidth for quite some time. If you are on my channel, you've probably seen me talk about it before. This is a telecommunications company. They got some debt. Be careful. I'm not recommending anything, all for education and entertainment. But I kind of like these bottoming processes. Sometimes there's a contrarian in me. I try to add these dip buys to my portfolio from time to time. But what I'm trying to explain here is the aspect of I've got one chart open, and let's say I'm going to trade this chart. Let's say I want to trade it to the long side. Well, it's pretty important that before you trade anything, you know what the broader market is doing. There are a ridiculous number of stats and facts out there that show you that the individual stocks or cryptocurrencies or forex pairs or futures are correlated with the broader index. So if the broader index is going up, there's a higher probability that the individual stock may also be going up. Now, keep in mind, you can inverse that in the sense of if the broader index is going up, but your individual stock is going down, well, that's probably not a good thing because everything else is going up and your individual stock is going down. Now it's being outperformed. So the whole point here is why trade looking at one specific stock at a time? Now, if you have TradingView or some other platform, you can open up this multiple chart layout and you can actually look at this in real time. So here's a great example. I'm actually going to turn this into a line chart. I'm going to go to a weekly. Let's go to year to date. I'm going to go to the NASDAQ 100. I'm going to go to a line chart, and I'm also going to go to year to date. Now, this is really interesting because you can already see that there's some kind of connection or correlation here between the two. What I mean by that is that they're both, to some degree going up and to the right. Of course, Bandwidth, as you can see here, has had some much larger spikes and much larger pullbacks here compared to the NASDAQ 100. But the moral of the story is that's interesting to know. You've got something that might share a correlation with the market. Now, if it shares a correlation with the broader market, well, now you have to know what the broader market's doing if you want to place a trade in that symbol. Otherwise, you're going against the sheer correlation that's happening right before your eyes. Trends are quite powerful. People program things based on trends. Investors will tell you past data doesn't matter. But then at the same time, they'll quote that an index is up 7% a year. Well, they're using past data, by the way, just to quote that. So, there's some irony there. So a lot of the things happening in markets are utilizing past data into what's happening now. So this quick tip is pretty interesting if you can utilize it. So let's say you wanted to place a trade on Bandwidth at this point. I'm on a daily chart here on the left. Let's go to the NASDAQ 100 on the right. Now, quite frankly, this looks like a bad trade, actually, all things considered. Let's just do 1 month. And let's do 1 month. Good to look at them over similar time pairs. So this looks like a bad trade right now, despite me liking the stock, and here's why. So it pulled back. Check this out. Look at it. Pulled back. Don't get me wrong. The NASDAQ 100 pulled back as well. So they're both following this pullback. But what's kind of a red flag for bandwidth is look at the NASDAQ 100 here. It has not totally, but it has retraced a big part of the move. What has bandwidth done? It's lagging. Now, you just hate to see that. It just means that investors aren't interested. It's got more sellers than buyers. People would rather buy the index or the instruments in the index than bandwidth in this example. It's kind of concerning to some degree. Now, I still am a trader of bandwidth, still following it, but this has my attention, and it's why I wanted to make this video, because why fight such a massive market trend? The NASDAQ 100 alone has a market cap in the trillions. You think about Amazon is in it, Meta is in it, like the most massive companies. So if trillions of dollars are flowing toward this, but not toward this, it does have to catch your attention a little bit. So why force the trade? Now, this took me a really long time to understand. I'll tell you why. Here's the psychology. If you're watching this, you probably think you're the greatest trader ever. You know something the market doesn't know. You are right about this. So now you dive in and you try to get involved because you think you're going to get ahead of the return higher, similar to what the NASDAQ 100 does. Now, there's some arrogance there, and sometimes you have to be arrogant in markets to succeed. But for the most part, time and time again, you don't have to be first in markets. You do not. It actually has shown that it's better to sort of wait and to get, even if, there's some stats to show that buying all-time highs is actually a good thing to do, because an all-time high is often a sign that something is going in the right direction. So why wouldn't that continue? So you can just wait, right? There's no reason to force it. In fact, we can see right here, there's a divergence happening, and now it means to slow down. So I've shown this for equities. You can look at this for crypto or FX as well. So a great example is, I just want to think of a cryptocurrency. Well, let's do Sol USD. Of course, you may be familiar with Solana. Once again, this is all for education and entertainment. None of this is advice. Never, ever, ever. It's in my profile, all that good jazz. Okay, so now I've got crypto total market cap. I click. Now, this is interesting. So let's look at the aspect of Solana USD right here on the left, and the crypto total market cap to get a feel for its relative strength and what's happening. All right, now I am going to move this a little bit just to get the labels out of here. 2024. Now that's interesting. I mean, there's some correlation here. In fact, we could change this to a percentage scale to really get a feel for what's going on. So we do percent. So Solana's up about 20% since the start of the year, and the crypto 21%, and the crypto total market cap is up. Let's see, you got to get start of the year. It's up about 20% as well. So they're pretty much like nicely correlated at the moment. So actually, I don't think there's much insight here. I actually, by the way, thought Solana would be outperforming the crypto total market cap, but we can look over different horizons. If we do over a year, well, okay, so that's quite interesting. If we expand it, Solana's up some 600% in a year. The total crypto market cap's up 97%. So there's some individual strength there relative to the whole market. But the whole point, I think, actually, if we go to 1 month, is that at the moment, there's nothing really here. They're actually tracking each other quite closely. If you look at the chart on the right and the chart on the left, they kind of feel like similar charts. Well, so now you know, and you can ask yourself, like, is the market behind you with this? Is the trend also happening with the market? And you can really readjust your outlook if it makes sense to get involved. Now, I'll tell you another interesting way to think about this. Why risk your hard-earned money on an individual pair when they have far more volatility, when you possibly could just get involved with an index, especially if they're tracking in a similar manner? Now, it's widely known that an individual stock, let's say we just look at GameStop. So GameStop is going to be wildly, wrong chart, let me put GameStop here, is going to be wildly more volatile than, say, the S&P 500, which we can track through. Let's do the S&P 500 E-mini futures. I'm not going to use any ETFs as much as I want to, because I realize they get so much free promotion. I'm kind of trying to change that. I think a lot of people should be more aware of that. Every time you chart these ETFs, you're giving them free promotion. That's free assets under management. They've got plenty of money. Something to think about. More on that later. But GameStop is going to have, it's an individual stock, naturally far more volatility than an index of 500 companies. So as you start to feel how they are trading relative to each other, you can also then ask yourself, is this volatility of buying or trading this individual stock worth it when I could just buy or trade this massive index with less volatility that's already going the same direction? So this intermarket analysis between the broad market and the individual stock or crypto or Forex pair is, I think, a game changer for the new investors and traders out there. You may already do this. Maybe you haven't thought about this, but it's pretty important. And I'm going to end with something really special. I like to do this in my videos if you stick around the whole time. And that is that in bear markets, there's a saying, all correlations go to 1. So when markets go down, there is a very low probability that all the individual stocks, though, will be going up. In fact, when the big indexes go down, they tend to drag everything down with it. So I'll say it again. In bear markets, all correlations go to 1. If the index suddenly crashes, you may think you have the single greatest stock ever or crypto pair ever. But if you look at the correlation, it shows time and time again that when the whole market goes down, even that individual stock isn't necessarily safe. It will also go down. And if it's not a strong stock with a very strong fundamental situation and strong investor base with cash to deploy, it'll really get hit hard. Now, just to end on the bright side of this, because this is where things get interesting, there is a world whereby the stock market crashes and all correlations go to 1, but a specific stock may not go down as much as all the others. Now, NVIDIA has been pretty volatile lately, but I'm just going to show you this, which is, let's say the market crashes, but NVIDIA just sort of has a slight pullback. Well, what does that tell you? All 500 companies went down dramatically, but one company held somewhat strong. To me, that's quite bullish. It means there's a strong investor base. There's people there supporting it. There's money flowing in supporting it. There's not that many sellers relative to all 500 of these companies. So I hope this video helps everyone. It's my next quick educational course, sort of my field guide to markets. It's all about making sure you understand the relationship between the individual pairs you're trading and the broader index. I focused mostly on stocks in this video, touched up on equities. I want to do a more Forex focused video at some point in the future. You'll just have to subscribe in order to get that. I hope this helps you out. Thanks for watching.